Very good morning, traders and friends. I'm Nalnakshi Swami, welcoming to my channel, Smart Index Edge. It is my effort, constant effort to make intraday trading very simple. How many times you might have seen many people talking about identify the trend on intraday basis so that you can succeed in your trading. But identify trading, I can tell how many times you might have failed by drawing trend lines, by joining the points. So you might have lost money also by drawing trend lines. And many people, they talk about the trend, higher highs, higher lows, and all those things. So for the people actually, traders, it becomes an very, very tedious task to find the trend in the market on intraday basis. My effort in this to reduce this task was constantly, I was searching for an indicator and which can solve my problem as well as yours for trend identification, making it easier for you people to trade. So today I'm going to bring in such an indicator beautifully designed by one person, DGT. Before that, I'm going to talk about how it is constructed, what is the thing and what it is doing it. So coming to that, I'll go to my PPT. I'm going to explain this. So in the market, actually, quantitative analysis is used. How quantitative analysis is used? By using the mathematical and statistical methods to evaluate and interpret numerical data. So numerical data is available for us in the market in the form of price movements. So it involves analyzing measurable and quantifiable information to identify patterns, trends. So, and relationships often for decision-making purpose. So, quantitative analysis is used by using mathematical tools. So, what are the mathematical tools? Uses of tools like regression analysis, probability, and statistical modeling to analyze the data. Key features. So, in finance, quantitative analysis might involve analyzing the historical stock price data to predict future movements. So, it can be used by using statistical models to evaluate the risk and return of an investment portfolio. So, for quantitative analysis, we are using historical stock price data. Why? To predict future movements. That is, finding the trend in the market. What is the statistical data? Refers to any data that is collected, organized, and analyzed for the purpose of gaining insights, understanding trends, or making decisions. It involves numerical or categorical information that can be used to measure, summarize, and interpret various aspects of a subject or phenomenon. So, what are the use of this statistical data? For us, in the market, financial market, mainly we need for trend analysis. So identifying patterns over time, stock markets, trends, we need that. Even for the intraday trading, trend analysis is very, very important. So here I have found an indicator which uses the regression method, which is calculated by the least squares method. That is a statistical method. Is a simple statistical technique used to find the best fitting line or curve for a set of data points. It minimizes the difference between the actual data points and the line we are trying to fit in. Okay. I'll come to this in detail in a simple way. I'll show it to you. So this is the regression. A static regression is least square method, calculation of data. Here, these are the x-axis and y-axis. Just note down. I'll go back to this. Go back to the chart. Here, see, for example, if every 15 minutes, for every hour, the price is close, the closing of the price will be, you will get some reading, closing of the price. So it will be like some few dots like this. Let me take this. All over scattered. Okay. If I try to join all this data, probably I may get line like this, like this, like this. See, this is what we are getting. You can see on the chart, right? The price. So we will try to, what we are going to do, we will try to put a line to these data points or a trend pattern, and we will try to find a trend in the market. But in least squares method, what happens is a best fit line, it calculates. I'm not going into the detail of calculation of the least squares method. It calculates all this, it takes all these scattered data points and gives a best fitting line. So if I take this, it is not a trend line. 1 minute, let me remove this, remove drawings. And by taking all these data points, some best fitting line will be created in the market by using least squares method. So that is called as a regression line. So I have found an indicator. For example, I'll show it to you. See, you are seeing this chart without any indicator. I tried to apply the trend line, but not properly. And if I use this indicator, this is available on TradingView. That is, if I go to the indicator section, if you type in linear regression channel /curve/slope by DGT. If you type in that, you are going to get this indicator. This indicator, if I apply on the chart, it is giving you a linear regression line. This is the central line. What you are seeing, you are getting a linear regression line, collecting all this data, and by calculating by the least squares method, statistical method, a middle line has been created. And this indicator it is using a channel, say upper channel and the lower channel. This is the upper channel. Above the linear regression line, and there is a channel will be created. Upper channel and lower channel will be created. And the calculations, it uses standard deviations for the from the linear regression line. This is the central line is the linear regression line, which is giving you a mean data about this. So how can we utilize this indicator for our trade? For example, suppose when the price starts, let me go to the 15-minute time frame. You can utilize if the price is near the linear regression line, this central line is a linear regression line. This will act as support and resistance for our trade. Suppose if the price is above the linear regression line, mean this line, you can go long. That is on 20th, the first candle was a bearish candle, and this dark brown line is a curve, 50. It will go for a calculation of 50 period, 50 candles back, and it will give you a curve, and it is a regression line, and price is above this. When price starts trading about the mean regression line, this is the middle line, regression line. So then you can consider for buying the market, going long in the market in intraday. And it utilizes standard deviation. This is upper boundary, and this dark red colors are lined channels. It is a channel for this regression line. When price starts moving above this, moves away from the linear regression line, it tends to become overbought. You can imagine it as an overbought condition. Then you build a strategy to go long. As long as price stays above this regression line, you can consider the trend is positive, and you can hold your position by trailing your stop loss. You can use Bollinger Bands for confirmation of overbought or oversold condition, additional, and also you can utilize, combined with this, you can utilize RSI for your trade. For example, let us go to the trade on Friday, latest trade on the Friday market. Here, linear regression line crossed. You can see this is the best fitting line for all these data points. Actually, first 15-minute candle was a bullish candle, penetrated through this slope, 50 period brown colored slope, and could not sustain. It started coming down. You can see second, third candle coming down, and in the fourth 1, 2, 3, 4, fifth candle, there was a rejection from the candle. Suppose if you would have taken position here, you could have held this till this. This is a bullish thing. When price climbs over the linear regression line. It is a bullish thing, and it touched the upper channel band, and you can see a correspondingly a gravestone dozy formation. Maybe it is an overbought condition. You need to check with RSI, or you can apply Bollinger Band to this to identify whether it is in overbought condition or oversold condition. You could have taken a sell call, intraday sell call in this by identifying this, and it started coming down. It started going below this best fit line, that is a regression line, indicating the trend is down. So you can see in this candle, price tried to move higher, it got rejected. So it acted as resistance. It can act as a support for your trade, intraday trade. Even if you can go to the lower time frame, you can see after this, you could have taken a sell call on Friday here after noticing rejection from there. When price started moving below in this time frame, this is the best fit line for this data. So when price started coming below that, that is an indication of the weakness. So you understood the trend properly in the market. So you are not going to act on this green candles because everything is clear and it is collecting the data and putting a regression line over here, and it is suggesting that when price is coming below that, and also it is curve line, it is suggesting that trend is down. So it is 100% clarity in your mind for an intraday trader, not acting on these green candles. Many people, they act on these green candles as a reversal thing and they get stopped out. Definitely they will get stopped out. So this linear regression line and channel indicates the trend, indicates it as a support and resistance, and the channel bands, these are the channel bands to overbought and oversold condition. Everything has been coded, and a standard deviation 1, standard deviation 2, you can see on this. I'll show it to you later. When it came down, RSI reading might be in oversold condition. Let me apply the RSI. You can combine this strategy with RSI. So you can see RSI is in oversold condition. See, if I draw a vertical line over here, so price is at the bottom of the linear regression channel. So when the price came here, correspondingly RSI is in oversold condition. The reading is 28.46. And in the next candle, you are seeing a strength in the RSI climbing over its moving average. So you could have gone long and also this slope, this brown colored line, it indicates the 50 back slope. When price starts moving above this slope, and also RSI moving above its moving average, climbing above the 50 period line, and you could have held the position trailing your stop loss. And here you could have terminated your position because of overbought reading on RSI, and also price started coming down inside the slope, inside this slope. Then it indicated weakness. You can consider it as a resistance. You could have gone and you could have applied this. You could have gone for buying call option. Here, buying put option. It would have helped you. Easily, you can identify the trend in the market, combining with the RSI or combining with Bollinger Bands. You can trade very easily. So this linear regression indicator or a channel by slope indicator designed by DGT is an amazing indicator which helps you in your intraday trade for identifying the trend. Sometimes it becomes very difficult for a novice trader to capture all these moments. One need to be more efficient to see the market properly. With RSI only, you cannot make out. But you are getting the best fitting linear regression line in front of you, telling this is the boundary for this data. When price starts moving above this slope as well as this linear regression line, trend is confirmed. So it gives confidence, boosts energy into you to hold the position. You will not be in confusion to take the trade. So this is an indicator you can apply on your chart, directly on your chart, and it uses the statistical method, that is least square method calculation, and gives a best fit line for all these data, price data. So it is a best fit line, and above these two bands are the channels, and in between lines are the standard deviations plotted. So you can go to the indicator section, type in linear regression, linear regression channel, slope, DGT by DG trend. So if you click on this, if you can read more. If you click on this, you can go through all these things, how it has been constructed, and understand the indicator better, understand the concept better, everything you can go through it. I've tried my level best in a simplified way. I've explained it to you. And I've started using this indicator. It has given me good results. Good results for my trade. Okay. So go through everything and do that. You can build a strategy by utilizing this for identification of the trend, to hold the position for intraday. It can be applied for your call option or option trade. Let me go to the option setting option. We'll check on Friday when the price came down. 1 minute. When the price came down 23,100, let us check what happened to the call option. Let us apply the call option 23,100, 30th January. Here I'm going to apply this call option. So same time, 10:21, the RSI was in oversold position. and the RSI climbed over its moving average in this candle, in this small green candle, and you are getting the best fit line over here, linear regression, and also a channel. When price started climbing above this, even if your entry would have been very late, you could have held your position, trailing your stop loss. For example, if you would have entered around 240 or 247, you could have run this position till 300. Almost around, you could have captured 60 points, and when price became overbought, RSI reading in overbought condition, immediately we are not going to take any position. When the price start climbing below this, RSI climbing below this, its moving average, see it has pierced through it, then it is clear indication, get out of the trade. That's it. You are not going to experiment or manipulate. You are not going to see for pullbacks, reversal, retest, everything. You are not going to complicate your trade with that. So you simultaneously, you could have taken entry in when you saw weakness in RSI, you could have gone for an put option and you could have taken traded for this. So you can build your own strategy with the help of this linear regression channel. Even without the indicator, there is a tool. Let me hide this, and there is a regression tool is there. Suppose if you want to apply from here to here, just drag it, you are getting a channel. This is the best middle line, is the best fitting line. So your entry will be very late, but that indicator with the help of RSI and this indicator, your success rate will be very high. You can trade. Because this tool has got limitation, it has not calibrated for standard deviations. Here in this indicator, everything has been included, 2 standard deviations and everything. It is putting only channel above the regression line. So it has got this tool has got limitation. That's what I wanted to say. You can utilize this indicator and master this strategy, combining with RSI and Bollinger Bands, which I have mentioned in my previous videos. You can succeed in your trading. So you will get clarity in the trend by using regression channels, linear regression channels. This is how linear regression has been constructed by getting the best fit line by using least square method. Thank you very much, friends. Nalnakshi Swami signing off.